Good morning, Cattle Market News. Shaylee Stewart here with your Cattle Market News tip sheet, sponsored by DTN, and welcoming you into another wonderful week. I'm excited to be here with you all again this week because I know that you have questions. It was just last week that we were talking about a rallying market on both the live cattle and feeder cattle side of things. And then last week, the market pumped the brakes on both the live cattle and feeder cattle side of things. And largely the question is why? I thought that we had a smaller cow herd and that was going to contribute to a smaller calf crop, and that demand was going to outpower supplies in which we have to offer the marketplace, so prices were going to shoot higher. That is still all true. It's absolutely true. We have the second smallest beef cow herd that we've had in the last 50 years, the second fewest beef replacement heifers that we've had in the last 50 years. And so yes, all those facts, all those statements are still true. But last week, the market came under pressure because of one thing and one thing only, and that is this year's corn crop. There were some tours that went around and just noticed that the corn crop's yields aren't going to be as strong as they thought. There's more damaged crops than what they assumed. And so honestly, right now, the corn crop is just a big question mark. How much corn are we going to have? What are prices going to go to? How's that going to affect feeder cattle demand? What are feeder cattle prices going to be able to go to if cost of gains go higher because corn prices go higher? There's a lot of question marks around the corn crop right now. And honestly, that's something that we just need to be okay with, because until that crop is harvested, there is going to be uncertainty. But that doesn't mean that you need to throw out all of the fundamentals of the fat cattle market, the live cattle market, and the feeder cattle market, because like we've talked so many times, and this is a lesson that we just need to continue to preach, your cattle are an asset. They are absolutely an asset. But if the market isn't garnishing prices in which you desire, in which you expect, then take a step back and say, do I need to market at a different time? Do I need to market at a different location? And how do I need to market my cattle to get the prices in which I desire? And so if the market isn't showing you the prices in which you seek, in which you want, in which you deserve, then go ahead and take a step back, reevaluate the marketplace, and say, how can I treat my asset like an asset so that it can bring me the prices in which I want? So nevertheless, like I said, last week's pressure stemmed from the corn market, and that will likely continue to be the reality of the cattle market until we get that corn crop harvested. So nevertheless, let's move on. Let's get you caught up with the details of last week's marketplace. Starting at the top of the report, your Friday to Friday livestock contract changes. Throughout the week last week, August live cattle fell 80 cents. October live cattle fell $2.20. September feeder cattle fell $2.55, and October feeder cattle fell $3.38. Meanwhile, September corn gained 43 cents and December corn gained 41 cents. Let's jump on into that fat cattle trade. Unfortunately, I'm going to tell you that we saw lower prices and a thin volume traded. So most of last week's trade developed on Tuesday and Wednesday, with the Southern Plains trading cattle for $1.38 to $1.44, though mostly at $1.42, which was considered steady with the previous week. In the Northern Plains, dress cattle sold for $2.30 to $2.38, mostly though for $2.32 to $2.33, and that was considered $1 to $2 lower. Like I said, not only were prices lower, but we had a thin volume traded. Only 70,637 head traded, with 69% being committed for the nearby delivery and 31% being committed for the deferred delivery. Last week's slaughter, though, this is big, this is important, this is powerful, and this should give you some excitement to move into this upcoming week with. Last week's slaughter was estimated at 678,000 head. And so we have two USDA reports in which we get slaughter data from, the 7-11 report and the 7-12 report. The 7-12 report comes out every single Friday, and that is the estimated weekly slaughter data. The 7-11 report comes out every Thursday, and that is a report that runs 2 weeks behind, but that's the actual slaughter data. And so, like I said, last week's slaughter is estimated at 678,000 head. If we see in 2 weeks that that number holds true and that there were actually 678,000 head processed last week, that will be the largest slaughter week for the year. Very impressive. Extremely strong news for feedlots who are looking to market fat cattle, because they know that packers are clipping through numbers right now. And so that 678,000 head is 17,000 head more than the previous week and 25,000 head more than the same week a year ago. Let's talk about beef cow slaughter, because it is still so important to continue to mention. So for the week ending August 13, 2022, there was 72,100 head of beef cows processed, pushing 2022's beef cow slaughter total to 2,495,100 head. Let's talk about box beef trends. Last week we saw some pressure in the box beef market. Choice cuts averaged $263.29, down $1.29 compared to the previous week, and select cuts averaged $238.22, down 21 cents from the previous week, with a total movement totaling 586 lows. So nevertheless, obviously packers are going to push the brakes on the fat cattle market if they're seeing lighter demand for box beef. They're obviously going to take any opportunity that they can to really slow down the momentum seen in the fat cattle market, just because you know what, they know as we get deeper into the third quarter, deeper into the fourth quarter, they're not going to be able to do so. So they're going to take any opportunity now to do that. Let's talk about carcass weights. This is a very peculiar point of last week's market, and one that I cannot answer. I do not know why. I do not know how. It does not make sense, but nevertheless, we need to report all things, and so let's talk about it. For the week ending August 13th, 2022, steer carcass weights came in at 901 pounds. That is up 9 pounds from the previous week and up 3 pounds from a year ago. Heifers averaged 822 pounds, up 8 pounds from the previous week and up 5 pounds from a year ago. You know what? Yes, the weather has been a little bit cooler in the north, but it is still not cool enough to allow for maximum feeding potential. We have slaughter that is running aggressively. We have show lists that are extremely current. And like I said, we are not at the time of the year that we can expect maximum feeding potential in feedlots. So given that this carcass data is higher, it doesn't make sense. It doesn't jive. It doesn't add up. But nevertheless, that's what the USDA reported for the week ending August 13th, 2022. That's something that we'll need to continue to watch and monitor and just see if it was an odd week or if that we're going to be seeing higher carcass weights. That's a question mark in the marketplace that we need to continue to monitor. So nevertheless, let's talk about imports and exports. Last week, fresh beef importers totaled 18,953 metric tons, with Canada, Mexico, and Australia being your biggest importers. Last week, beef exports totaled 17,000 metric tons, with China, Japan, and South Korea being your largest destinations. Let's talk about the feeder cattle market. Obviously, we saw some pressure last week because of the corn complex. Thankfully, that really didn't put a hindrance on the video sales last week. We saw phenomenal demand for those cattle, especially with the later fall delivery. But throughout the entire nation, in your north central and south central regions, prices were called steady for feeder cattle to $4 higher. But in your southeastern region, prices were called steady to $5 lower, except the 4-weight steer calves, which sold $2 higher. So let's get into the specifics of some of those feeder cattle prices. So in your north central region, that is Montana, Wyoming, Colorado, North and South Dakota, Nebraska, and Iowa. 6 to 700 pound steers sold for $2.04, and that was steady with the previous week. Your 7 to 8 weights sold for $1.94, that was steady with the previous week. And your 8 to 900 pound steer sold for $1.86, and that was $1 stronger than the previous week. In your south central region, that is New Mexico, Texas, Oklahoma, Kansas, and Missouri. Your 5 to 600 pound steer sold for $1.99. That was $4 stronger than the previous week. Your 6 to 700 pound steers sold for $1.88. That was steady with the previous week. And your 7 to 800 pound steers, they sold for $1.80, which was also steady with the previous week. And last but certainly not least, in your southeastern region, that is Arkansas, Louisiana, Kentucky, Tennessee, Mississippi, Alabama, Georgia, Florida, and North and South Carolina. Your 4 to 500 pound steers sold for $1.86. That was $2 stronger than the previous week. Your 5 to 600 pound steers sold for $1.74. That was steady with the week before. And your 6 to 700 pound steer sold for $1.63, and that was $4 weaker than the week before. So nevertheless, folks, you know what? We've got some pressure on the fat cattle market because of the corn crop and its uncertainty, but that doesn't change the fundamentals. That doesn't change the facts that we know heading into the next year and the next years ahead. So nevertheless, stay attuned to this marketplace, stay abreast on all things transpiring, developing, because it matters right now, because you want to get the high prices that the market has to garnish that you deserve when the opportunity comes around. Shaylee Stewart here with your Cattle Market News Tip Sheet.